The Federal Reserve is expected to announce another round of interest rate hikes tomorrow. This comes amid growing calls for accountability after several banks collapsed earlier this month. That includes First Republic Bank, which is seeing major shifts in its stock price amid a bailout from rival banks. So let's bring in Colby Smith. She's a U.S. economics editor for the Financial Times. Colby, thanks for joining us. You heard us.
Thank you for.
Yeah, really excited to have you. You heard us talking about that. So Jamie Dimon leading all these other major banks, the big banks, the 11 banks, in a potential, not bailout, but a way to prop up First Republic Bank. And then you got this potential Fed decision to raise rates. How do you see it?
So I actually think the thing injecting a bit of confidence here is recent comments from Treasury Secretary Janet Yellen, who signaled this morning that the government would be potentially willing to step in and support other small lenders who are experiencing deposit flight. So importantly, what we saw over a week ago now was the Treasury, the Fed, and the FDIC stepping in to guarantee depositors of Silicon Valley Bank, which had failed, and then later Signature Bank, which they took control of over 2 weekends ago. So the fact that Treasury Secretary Yellen is signaling that this is something that they could apply to other banks, I think is a really kind of helpful stabilizer at the current moment. But of course, the headlines about there being some action from other bank executives certainly does help calm the situation to a certain extent and confirm that more is going to be done here in the event it's necessary.
So the Fed Chair, Jerome Powell, has always been sort of really transparent about what's coming in the future, right? He leaves like there's a long runway, and somehow once the shoe drops, and I'm mixing my metaphors all over the place, the stock market still goes crazy, right? Even though they know he's going to raise rates. So he's been saying this for a while that, rates are going to continue to go up because he wants to see 2% inflation, and we're well above that. So has he spoken at all in any way since this concern about the banking system? And what is the talk? The expectation is that there's going to be an increase, but is the conversation more about whether or not there's going to be one, or more about just how much it's going to be?
So Chair Powell has, not said anything in terms of the policy outlook. Since the crisis really escalated. What we have heard from him in joint statements with the Treasury Secretary and other government officials is that the banking system does remain resilient. It's important to note that the Fed has stepped in, on 2 occasions here in a really forceful way to stabilize the situation. The first being a lending facility that it announced 2 Sundays ago that basically said, any lender that needs aid here, there's a facility in order for them to funnel that support through. The second one being an increase in the access to so-called dollar liquidity. So just ensuring that the financial system doesn't kind of gum up from the ongoing situation. But in terms of the actual trajectory of monetary policy, we've been in this period called the blackout, where any kind of public communication is limited from Fed officials, and that's led to quite a lot of debate about what exactly the Fed is going to do. I think in terms of expectations, there very well seems to be a majority who think that the Fed is going to plow forward with an interest rate increase, a 1/4 point rate rise this week, and also signal that more interest rate increases are forthcoming. Inflation, as you mentioned, is still far too high, and they have tools to manage financial stability concerns. So in that respect, they can pursue these 2 goals.
All right, Colby Smith, I'm sure you have your hands full. There's a lot going on, more than normal when it comes to the banking world. Thank you so much for spending time with us.
Thank you.